Tonight, we're diving into Bitcoin, a digital currency that sparked global debate. In simple terms, Bitcoin is money that exists only online. You can't hold it in your hand, it lives on a global network accessible to anyone. Think of it as sending value over the internet, like an email for money. Unlike traditional money, Bitcoin doesn't need banks or credit card companies to move funds. Its goal? To create money not controlled by any government or institution. Instead, it relies on a network of computers to keep track of every transaction. This network forms a public record that's nearly impossible to cheat. Bitcoin is decentralized, no single entity is in charge. That's a big shift from the money we use every day, which is managed by central banks. It's a bold experiment in finance and technology, raising both excitement and concern worldwide. Bitcoin challenges us to trust technology, not traditional banks. It's a way to send and receive value online, open to everyone. The system is designed to be secure, transparent, and global. We'll explore how it works, why it matters, and what it means for the future of money. Whether you see it as a revolution or a risk, Bitcoin is changing the conversation about what money can be. Let's break it down. Bitcoin's story begins with a mystery. In 2008, during a global financial crisis, someone named Satoshi Nakamoto published a paper online. It described a new kind of money, one not controlled by banks or governments. Satoshi's identity remains unknown to this day. In 2009, the Bitcoin network launched and the first block, called the Genesis block, was created. Hidden in that block was a message, a newspaper headline about bank bailouts, signaling Bitcoin's purpose as an alternative to the traditional system. Early on, only a handful of tech enthusiasts used Bitcoin, mining coins on home computers. Back then, a single Bitcoin was worth almost nothing. In 2010, someone famously paid 10,000 Bitcoins for 2 pizzas, worth millions today. Satoshi communicated only online, then vanished in 2011, leaving the project to volunteers. The invention was left behind, but the creator's identity is still a blank. What started as a curiosity has become a global phenomenon. Bitcoin's origins are shrouded in secrecy, but its impact is undeniable. The revolution had quietly begun. How does Bitcoin actually work? The answer is blockchain. Imagine a public notebook, visible to everyone, recording every Bitcoin transaction. This notebook, the blockchain, is copied across thousands of computers worldwide. When you send Bitcoin, your transaction is bundled with others into a block. Powerful computers, called miners, race to solve a complex puzzle to add this block to the chain. The first to solve it adds the block and earns new Bitcoin, a process called mining. This system verifies transactions and creates new coins, all without a central authority. Once a block is added, its transactions are permanent and nearly impossible to alter. The blockchain's security comes from math and global consensus, not trust in a single company. That's how Bitcoin moves securely from person to person. Bitcoin and traditional money, like US dollars, serve similar purposes, but they're fundamentally different. Traditional money is fiat currency, issued and controlled by central banks. These banks can print more money, set interest rates, and regulate your funds. Bitcoin is decentralized, no headquarters, no CEO, no central bank. Its rules are set in code enforced by a global network. Only 21 million Bitcoins will ever exist. That limit can't be changed. With fiat money, governments can print unlimited amounts, risking inflation. Bitcoin transactions are peer-to-peer, cutting out many middlemen. This can make international payments faster and sometimes cheaper. To open a bank account, you need ID and paperwork, a barrier for many. With Bitcoin, anyone can create a digital wallet and transact, no ID required. Transactions are public but tied to digital addresses, not personal names. This offers privacy, though not complete anonymity. Bitcoin challenges the traditional system, offering a new way to think about money. It's a currency built for the digital age. Bitcoin sparks strong opinions. Supporters see it as financial freedom, decentralized, scarce, and resistant to government interference. In unstable economies, it can protect savings from inflation or seizure. Some call it digital gold, a store of value for the future. Critics worry about its wild price swings, making it risky for everyday use. Its partial anonymity has linked it to illegal activities and money laundering. Mining Bitcoin uses massive amounts of electricity, raising environmental concerns. If you lose your private key, your Bitcoin is gone forever. No help desk to call. Governments and regulators remain cautious, debating how to handle it. The risks are real, but so is the potential for change. Bitcoin's future is uncertain, but the debate is shaping the future of money. Despite controversy, Bitcoin is used in real ways today. It's a tool for international remittances, sending money across borders quickly and often cheaply. For the unbanked, Bitcoin offers access to digital finance with just a smartphone and internet. Businesses, from tech giants to coffee shops, are starting to accept Bitcoin payments. Lower transaction fees and new customers are the appeal. Many people use Bitcoin as a long-term investment, hoping its value will rise. In developed countries, it's often treated like digital gold, a hedge against uncertainty. Bitcoin is moving from niche asset to mainstream option, step by step. Its uses are growing, even as debate continues. The experiment is underway, and the world is watching. The future of Bitcoin is wide open. It could gain mainstream acceptance, with more companies and funds treating it as a legitimate asset. Technology might make it faster and cheaper, while regulations could bring stability. Or it could remain a niche asset. Digital gold, not daily money. Challenges remain: government crackdowns, environmental concerns, and competition from new digital currencies. The outcome depends on technology, regulation, and public trust. Bitcoin began as an experiment, and that experiment continues. Will it reshape finance or fade as a fascinating footnote? No one knows for sure, but it's forced us to rethink money, trust, and technology, and that conversation is just beginning.